So what time you should be getting to your charts is really up to whatever fits your schedule, but you'll know ahead of time just by looking at your economic calendar. So we'll head over there. So when you're on your economic calendar, which is Forex Factory for me, you can go to filter. I check off the yellow and orange, and I'll just look. So going into next week, if I wanted to know what time should I be at my chart, I'm looking at this here. So what time you should be really coming to your chart depends on your economic calendar. On an average day, I'm coming at like 9 o'clock New York time and spending the 30 minutes to analyze. If you have a high impact news driver at 8:30, which is next week on Wednesday, you can come to your chart at 8 and then chart for 30 minutes and just scoot everything back. But usually I'm on my screen at most for 90 minutes. So 9 o'clock to 10:30 at most is when you'll see me on my chart. Usually 9 to 10 is my trading hours. So when there's nothing really going on at the 9:30, I usually come to my chart at 9. So once you get your economic calendar down and you can plan ahead of time on when you should and shouldn't be at your chart, as soon as you get to your chart, okay, whether it's 8:30 or 9:30, what you're looking for is opposing the liquidity to your daily bias. So let's say you have a daily fair value gap here. That's your potentially your draw. What you'd want to see is 8:30 or 9:30, and it should be on your economic calendar. You'd want it to go the other way, taking out any liquidity, whatever looks the best with a pool. And then usually you want to see like a breaker in here, and then see that MMXM kind of form out into your daily bias. That's what we do when we trade. A lot of people say, "Oh, you're gatekeeping the time." Da 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 da. I'm not gatekeeping. And this is just a little bit. Where it all really starts is once you can establish what time you're coming to your chart, from there, that's time. So it's time and then price. So once you can establish what time you arrive at your chart using your economic calendar, then you start to look at price. Use your daily time frame. Practice that drill I showed you in my last video. But let's say this is a daily volume imbalance or a daily SIBI or any type of daily level, and you highlight it and you extend it out and you drop down to your lower time frame. So let's say you came at 9 o'clock. Post 9:30, you want to look for equal highs or equal lows. And now if one side or the other is going to have more smooth edges than the other every day, one side is going to have smoother edges than the other, you want to figure out what side has smoother edges. Treat it uniquely from the daily bias. So don't have your daily bias and your today bias like merge. Treat them unique, and if they line up, then they line up. Because a lot of the times you'll see your daily bias will be bullish. You'll get to your lower time frames, and then you start to make every scenario on why it should be bullish. Don't do that. Just drop down to your 5 minute and 15 and look at today's liquidity or whatever day you're trading on, and then trust where you see smooth edges. Now, if it's opposing to your daily bias, that means two things. 1 to 2 things. One, it could be more dangerous to trade that day because both sides are pretty much targeted. Or if the liquidity is on the opposing side of your daily bias, just wait for the opposing to be taken out and then try to get on side. And then once you get a little more advanced and you see, let's just say, liquidity down here. Well, that's a bad way to put it. Well, let's just say there was opposing liquidity down here to your daily bias, which is up here. You could trade to that, taking them out off your 9:30, either a little bit after or a little bit before. You'll know when time goes on. But in a perfect world, if you could get your lower time frame liquidity line up with your daily bias, what you'd want to see is 9:30 shoot beneath any low. You want to see a structure shift, not an inversion. And then you want to see it start to do your market maker buy model up to your daily bias. And you'll know when to wait because of your liquidity being taken. So that's how you know you can wait and sit on your hands until they're taken out. Just another thing is use your regular trading hours and see if it gaps down. All right, so I'm going to try to show you guys the best way to achieve that skill is to draw on liquidity in these demonstrations. So I'm on CL. I'm just going to click back some days and we're going to just run over the 930. And if you guys want to learn more about entry models and whatnot, I do have a Patreon down below. It should be a discount, so grab it while you guys can. One thing that you guys should do, and this is what I did to help me get better as a trader, and I know a lot of people want to get better as a trader. If there's something I was gatekeeping, it'd been this. A good exercise you need to do is bring your vertical line to wherever you're going to be arriving on your chart. So for me, it's 9. The first thing you do is start marking out the draws on the 15-minute. Like here, here. And then what you want to do is see if it hits one of your targets. Now, in your head, you should tell yourself which one you're favoring more than the other. Like, put down in the comment right now what you think it's going for right now, buy side or sell side. Just so I know you're not cheating. And then see if it hit your target. Okay. It hit your target at 9:30. Not on the dot maybe, but it hit your target around the open. So the reason why I tell you to come to your chart at 9 and then see if it hits your draw like that, that's good. There's 2 things you can do here. First one is drop down and study that price run down into this level and then see where you could have got in. And if you do that about 6 times a day, you'll get to the point where you'll just come to your chart and then instead of seeing if it hit your target, you could just drop down and then try to trade there without studying the price run. Because you start to get a feel on what times you should be in there and out of there. So let's try this. And I was favoring sell side if anybody was wondering. Okay, so I gotta pay attention to the time. Here's 9:30. We could open up and go higher, or we could just keep going lower. I really don't know. But I'm waiting until it's obvious to get in there. And this is the part I really teach in the revamp. Okay, boom. It looks like a good fair value gap up to this high. So yeah, you could take a good little trade, but you should be running break even right about now. Reason being is the opening price, and it shouldn't come back in there like that. So do you guys think right now is a good trade? It's setting up for one. Okay. And you could put a limit on this and stop loss above the displacement and targeting your low. That right there for me, this was a market structure shift enough for me here, but this is a better one. And then take profit. You can either study these price runs and be like, okay, could have got in here, and then take profit, or you could drop down and do this. So that's what I do to get better. And we'll go to the next day. And an example on what it looks like to study would be is if you just mark out your 15-minute draws on liquidity. So for me, this is the only draw at 9 o'clock. So that's the only thing I'd be looking to trade into, because it looks like the only thing that needs to be filled. So it'd be my only target. Boom. So at 10 o'clock, it turns around. So yeah, at 9 o'clock, I said, that's my draw. Yes, it ran away. That doesn't mean I was wrong. That means I was right. So that's why I say don't drop down to your lower time frame sometimes and just start trading, because you're going to be wrong. And all you're going to do is say I'm wrong, when in our reality, that was right. But what you need to do from here is drop down to your 1 minute and study that price run into here and see where you could have got in. So before you do that on the 15, just look for something that's a little bit important as far as it makes sense on why you would go up there. So sell side. You'll see this on my lower time frame. And the inefficiency. So it looks like it purged and reverted back into that. We'll drop down to the 1. And then look at this price run. It's clean. Market structure shift here. Breaks up, comes down, breaker, fair value gap, entry. And I teach adrenaline, and this is adrenaline. If you are an adrenaline student, you know that. But this, around this window here, is when price will start to turn around and go to my draw. So that means every down close range like this and this and this should be supported at least until it gets up there. And that's how you know when the trader stops. But as far as time elements go, $9.30. The opening was pretty sloppy. It took liquidity, shifted up, and then ran. Silver bullet was really good. And one thing I'll say is your macros and your silver bullets work off the heel of 9.30 and 8.30. So whatever those things have done will determine if you should be trading a certain type of model. And that's why I always tell you guys to refer back to your economic calendar. But it probably won't make sense to you if you just don't know what I'm saying. And I don't know how else to say it besides what I'm pointing at. It's just time and then price. You know, start with your draw. Let price show you its hand. You know, like this is a clear shift to the upside. A lot of you guys' problem probably comes from like not having patience. Like you probably can't wait for this to happen. You probably think everything is just a go. But patience, you know, and you probably don't have patience because you probably don't know what you're studying or looking for, which is why I'm saying before you drop down to lower time frames and start trading to your draws, see if they're even getting hit. And then once you can convince yourself that you're hitting your draw more times than not, whether it's in a back testing session or whatever you're doing, then you can drop down and trade it. But if it keeps hitting your draw and you're like, okay, yeah, I'm starting to get the draws down, then drop down to your lower time frame and study it. Like, do what I just did. Mark. I would say the most important thing that you want to mark is the price run from its lowest point to how it got there. So study this price run. And what I mean by study is just copy this and then just paste it in whatever you do to journal.
From that jungle, get that understand. I said hot dog with my bitch. I say you looking got a bad red bitch. You fucking with my feet. You ain't seen them tears pour with the race.